Welcome back to the Tech Talks Daily podcast. I'm your host, Neil C. Hughes, where we explore the world of technology and innovation and how it's impacting businesses every single day of the year. And today, I'm thrilled to have Kevin Chong with us. Kevin is the co-head of Outwood VC and general partner at the London-based FinTech venture capital fund. And in this episode today, Kevin is going to share his personal journey, the founding of Outwood VC, and also provide a few valuable insights into the world of early-stage fintech startups. We're going to discuss the importance of sustainable growth through partnerships, and Kevin will highlight the unique advantages of London as a global fintech hub, from access to talent and capital to the recycling of startup experience. And if we've got time, we're also going to discuss the growing appeal of mission-oriented fintech startups and some of the verticals poised for growth, and how founders and investors are pivoting their focus during economic downturns by being more meticulous in preparing for funding rounds and hiring strong CFOs, etc. But I've probably revealed far too much already. That's the plan, so buckle up and hold on tight, because it's time for me to beam your ears all the way to London, where Kevin Chong is waiting to share his fascinating journey into the world of fintech, venture capital, and so much more. So, a massive warm welcome to the show. Can you tell everyone listening a little about who you are and what you do?
Thanks, Neil. So I'm Kevin Chong, co-founder and general partner of Outwood VC, a fintech venture capital fund based in London, investing across the UK and also the Nordics. My personal story is I was born in Malaysia. I'm Chinese Malaysian. I then spent a large part of my life actually in Australia, where I went to school and university. And then after degrees in law and business, I had some time as a consultant with PwC. And then I moved into banking and capital markets. And then one day, unexpectedly, I was asked by the bank that I was working for to consider a 2-year secondment to London. And within 2 weeks, I was on a plane to London. And that was 20 years ago.
Wow.
One thing leads to another. You just never know. And I made the move to venture capital about 12 years ago. Initially, it was a side hustle. Then it became full-time. Before starting Outward, I also co-founded Beacon Capital, which is a more generalist seed fund. And that was around 2013-14, when I think David Cameron first coined the terms Silicon Roundabout and Tech City. So Outwood VC is a product of about 10 years of work, and VCs are always asking startups about their product market fit. I think startups also need to ask VCs the same question. And with Outwood, we wanted to address a real need. And then it's where, so after companies, these startups have secured friends and family money, pre-seed money, maybe raised a small seed round from a small fund, but there's still a big gap between being able to secure a large institutional round. And in the UK, this tends to be when people are trying to raise somewhere between 2 million and 5 million. It's the most difficult round, the most difficult stage. And we wanted to build a fund that focused on that stage and to be dedicated to fintech, so that we can help these companies very quickly get to the next stage. So essentially what we want to be doing is to get a sort of 2, 3, 4, 5 million round done very quickly for a fintech startup, and then roll up our sleeves and help these companies get to a 10 million round, say, within 12, 15 months. And then, give it another 12, 15, 18 months, sort of much larger Series B. I mean, it could be anything from 20, 50, 100 million, depending on how the companies are doing. So that's what we do. And that trajectory that I mentioned, where we've sort of come in early stage and then get the companies to doing a sort of 100 million round within sort of 2 or 3 years, that has happened with a number of our companies. So it can be done.
Well, it's a huge pleasure to have you on the podcast. And one of the reasons I invited you on the podcast today is because you have been moving in the world of banking, fintech, startups and VC. You have decades of experience. I suspect you've seen many, many trends come and go and then probably come back around again. So I'm curious, as we're navigating through this period of economic uncertainty at the moment, what trends and themes do you think are likely to emerge in fintech during this recession? And How will this affect early stage market as well? Is there any trends you're seeing around this?
The macro conditions obviously not ideal at the moment, right? We've got inflation, very high inflation, a cost of living crisis, we've got a war in Europe, we've got political volatility. It all sounds bad at a macro level. But I think the interesting thing is early stage startups are actually somewhat counter-cyclical. And actually the last few years when money was flowing freely, that was actually not a great period for early stage startups. It may look like it from the outside, but actually for early stage startups, it was a difficult time. Hiring was very difficult. It was sometimes impossible. There was a lot of compensation pressure when it came to hiring. Startups were essentially competing with tech majors who were hiring at a rapid rate. And the fact that VC money was flowing freely was not necessarily great for early stage startups. You see, the problem with raising these big rounds is that you get forced into big valuations that are not sustainable. And you're also sort of being, you also you have a playbook where you're essentially trying to do things and optimizing for another round of funding to come in 12 months or so, because that was a playbook at the time. That's what you had to do. And so, a lot of people were, a lot of the growth was coming from paid acquisitions, when actually, product market fit may not have been there. So, long and short of it was that for a period, a lot of the things that were happening with the benefit of hindsight was not sustainable. So whilst we're in a difficult time right now, from a macro perspective, actually now is actually a better time for these early stage startups. And I think the big themes in the coming period is going to be around sort of sustainable growth. And that doesn't mean breaking even or being profitable at a very early stage. That's not what investors want, and it shouldn't be the thing that founders should be trying to achieve either at the early stage. So when I say sustainable growth, I mean, I'll give you an example. I mean, when money was flowing freely, I think very few startups were thinking about partnerships when it came to growth. People were going straight into direct channels and sort of taking the sort of shock and awe approach of displacing all the incumbents with a direct approach. I think because it was all about trying to show these growth metrics in a very short space of time, and that wasn't sustainable. So I think in this coming period, startups will be thinking a lot more about partnerships and finding the right partners, working up the sort of win-win arrangement where you can grow quickly and sustainably. So I think that's a big theme I see in this sort of coming period.
And it's so reassuring to hear that. We've all seen the doom and gloom if we've been scrolling down our smartphones on LinkedIn or whatever news channels we look at. And it's great to hear such positive news. And here in the UK, I think we do get dragged down with some of that bad news sometimes when there is so much good news out there. So can I ask that you share the case for London as the world's global FinTech hub and why it's attracting so much talent from the industry?
The first thing I would say there is that I don't think any place in the world has a monopoly on talent. There is talent everywhere, and you can, the way these things work now, you can do a startup from just about anywhere. So talent alone is not enough. And you need capital, you need mentors, you need service providers, you need sort of world-class service providers. And particularly in FinTech, you need access to people that make policies and regulators. And I think what London has, London's got two unique advantages. I think the first is that all of these things I was talking about, all these ingredients that are necessary to make a great startup, they're all in one place here in London. The talent, the capital, the mentors, the service providers, policymakers, regulators, we're all in one place. And if you're doing a FinTech, you need access to all of these things. And when I look at the Outwood portfolio, we've got a number of startups where it's so important to be close to the regulators and the policymakers, because essentially, with a lot of what these fintech startups are trying to do is to remake an existing regulatory situation, and there isn't a better place than London to be doing that sort of thing. We've got companies that are trying to trying to make some really big changes in the pensions industry. They're looking to reinvent private medical insurance. All of these things, because you need all these ingredients, and they're all in one place in London. That's where London has a huge advantage. The other area where London has a huge advantage is what I call the recycling of startup experience, because the only way you sort of do a great startup is to learn from your mistakes. And what we've got in London is a lot of entrepreneurs, fintech entrepreneurs, and sort of more generally startup entrepreneurs that are doing it for the second, third time, sometimes beyond that as well. And so you bring that experience, so you learn from the mistakes you've made, but also importantly, you've had the experience of working with VCs and investors. And so that's the sort of the big thing I see, big sort of differentiating factor I see, particularly across Europe, where, there are a lot of interesting places in Europe right now where startup hubs are developing. None of them are yet close to London in terms of having this sort of recycling of experience, of sort of people having done it multiple times and having worked with VCs and investors and knowing how to work with the rhythm of venture capital. And again, that's a second big advantage London has. So I think those two things, I think make London, the world's sort of leading fintech hub. It's us and probably the US. We're the top two.
And before you came on the podcast, I was reading more about mission-orientated fintech and how it's becoming much more attractive. So can you tell me a little bit more about that, and maybe expand as well on which fintech verticals you think are set to achieve better growth this year?
Yeah, so I think mission-orientated fintech has always been attractive, and what I mean by mission-orientated fintech is with fintech startup where there is a mission of making a clear positive impact on society, not just growing to meet sort of financial KPIs and raising rounds of funding and growing bigger for the sake of growing bigger. In the Outwood portfolio, right, we have startups that are on a mission to bring cost transparency to the pensions market. They're trying to fix a gap in private medical insurance so that every employee, from the checkout staff to the CEO, can access the same human expert for health issues that truly matter. Or we got companies trying to make public markets more public. What these companies are doing essentially, they're all on a mission to bring improve equality and inclusion. And the founders of these businesses truly care about the mission, and it was the mission that drove them to start the companies. So I think it's that type of thinking and those drivers, I think, that make fintech attractive for a number of reasons. It makes it easier to grow the right team to scale. It makes it easier to attract investment. It makes business more sustainable. So yeah, we're very keen at Outwood to the startups that have those mission oriented and driven by a mission. And your question about what fintech verticals are set to achieve growth this year. Right now, we're seeing a lot of startups focused on ESG, climate issues, and the sort of financial angles of that. The difficulty is sort of getting through these, looking at these startups and finding ones that are truly solving that's a solution to a real problem. And we spend a lot of time making sure that there are real sustainable business models before we invest, and that the market opportunity is big enough. So, whilst there are all these sort of trends and buzzwords, certainly our investment approach is to always go back to the fundamentals and ask ourselves, is the market opportunity big enough? Is it the right team? Does the deal make sense? So that's where we come back to.
And there is this period of uncertainty and volatility in many markets right now. So I'm curious, what are the ways in which investors and founders are pivoting their focuses during a downturn? And what impact are you seeing this having on the sector as a whole this year?
I think for founders, the reality is capital money is not flowing as freely. It won't be flowing as freely in the coming period as the past few years, right? And founders have to adjust accordingly. So the funding rounds, particularly these larger growth rounds, they're going to take much longer to do, and founders will need to be much more meticulous in terms of how they prepare for these sort of follow-on growth rounds. So I think in terms of like your question about how the founders pivot their focus, I think it's going to be as preparation and a recognition that funding rounds going to take longer to construct and complete. And it also has an impact. And it also has an impact on the sorts of people that you want to hire and help you through this period. Right? I think that particularly with startups that have reached scale and are looking to do these growth rounds, it really pays to hire a very strong CFO to help you with these funding rounds, because there'll be a lot more focus from growth investors on the financials and how the business is going to become more efficient in the coming period, and identifying these efficiencies, and this is what the really strong CFO can help you do. So I think those are maybe two things off the top of my mind as to how founders are going to need to pivot their focus in this coming period.
And another reason I invited you on the podcast was, before you came on, I was reading about why you think the downturn that we're all experiencing and seeing is in fact probably the best time to invest time and resources into early stage fintechs, because they're the ones that could be dominating the industry over the next decade. Can you expand on that too?
I mean, they have to be stronger in every way. I think the hiring will be better. I think the investors that will back these companies are going to be more experienced. I mean, what we had in the last few years was that there was a lot of emphasis on private markets, because actually a lot of the public market investors were finding it difficult to get good returns in public markets. So a lot of them had crossed over into private markets, and actually the sort of VC market was had become a bit of a strange place in the last few years. So what we're going to have in this coming period is, I think the investors there's going to be a reversion to experienced VC investors, and the way the startups will grow. Back to what I was saying earlier about sort of identity, trying to work out how to grow sustainably, is also going to make the fintechs that emerge from this period stronger. And then importantly, I think for everyone, for both the founders and for investors, I think valuations will be more sustainable as well. They'll be more sensible. They'll be more sustainable. So I think fundamentally, the startup world and everyone involved in this coming period will become more rational, and that's good for investors. It's good for the founders.
And I'm curious, from everything you're seeing, in your opinion, what are the fintech adjacent industries that have major growth potential, not just this year, but looking further ahead too? Is there anything that stands out?
The way we do our investments at Outwood, I mean, our thinking around fintech has always been broad. It's not so much a reaction to the sort of complexities of the environment that we have now, but I've always thought that you cannot think about financial services in isolation, right? You have to sort of look ahead and think, how will people consume financial services in the future? And I really do think it's going to be fundamentally different, right? For example, you could ask yourself there, how will someone buy a house in years to come? right? It's not just about the money. It's not just about trying to come up with new solutions about the money side, but it's also, you also want to, as an investor in the space, you also want to be thinking about how will that buyer be doing his or her due diligence on a property in the future, right? What sort of technology solutions can you can you bring into play there? Another example would be, you think about the workplace, and as a fintech investor, we had a lot of startups pitch to us about solutions to solve employee stress, with solutions around financial well-being, which in the end was all about either lending or selling people financial products. And the more of those we saw, the more we became convinced that these are not the solutions that will move the needle in terms of to build the workforce of the future, because people sort of more, spend more time worrying not about they spend more time worrying about, why their medical insurance or their health plans don't cover the things that really matter to them, for example. So, we were seeing these things, and for us, it's all sort of part of being a fintech investor that these should be areas of focus for us as well. And that's why we have a number of companies in our portfolio that, for outsiders, it's not obvious what the connection is with fintech, but for us, it's because we're sort of imagining, what the future of financial services look like, and what sorts of things will impact the way financial services is consumed and the interplay with financial services.
And I've got to ask, what's your big focus going to be over the next 12 months, and what excites you about the future? I appreciate you probably can't share too much, but is there anything you can share, any teasers you can leave us with about what excites you and what you're going to be working on?
I'm very excited by the fact that our fund and the 20 companies in our portfolio are all starting to reach inflection points where, the next 12, 24 months, we'll see some really amazing things happening. I mean, we're expecting a number of these companies to exit and look at IPOs or exit through M&A. And I'm very excited by the fact that, back to what I was saying earlier, that I think now is a very, very good period to be making investments in early stage startups that our second fund will be launching later this year, which will be a larger fund than the one we had before. It's about 50-60% committed already. So, very excited about that, because I think, the opportunities in this coming period are going to be stronger for the reasons I was talking about earlier than in the last few years. Super excited about this coming period. Super excited about, what's going to happen in sort of London and UK startups as well.
Well, I cannot thank you enough for coming on here and sharing your expertise, your experiences, and your story and your insights. But of course, if we were to take a look back across any of our careers, and anybody listening, none of us are able to achieve a certain amount of success without a little help along the way. So to end the podcast today, is there a particular person that you're grateful towards? Maybe they saw something, you invested a little time, or helped you get where you are today. Who would that person be? We'll give them a little shout out.
I'd see every interaction as a possible learning experience. I think you sort of learn from, we should always be open-minded about sort of, whoever it is that is in our circle, right? Whether it's somebody we've invested in, whether it's someone that it's been a partner. But one thing that just, if I think about the time that I've spent in VC and investing in companies, I do remember quite early on, one of my co-founders actually at Beacon Capital, this is the previous fund that I was doing, his name was Andrew Fullerton, and he had been involved in private equity for a long time. And I always remember, whenever we talk about companies and our investments, he would remark, this is what an amazing job it is that we have, in that, we get paid to stick our noses into other people's business. And what that sort of said, what that brought home for me is that actually it's a real privilege when you work in VC to be able to essentially stick your nose into other people's business, and you get to be a part of that journey, and you get to be a part of what they do. And I think investors should always sort of look at it as a privilege. It doesn't, you've been allowed in to be a part of the journey, and it can be, there are going to be bumps along the road, but if you always sort of remember and sort of take that approach, that actually it's a real privilege to be a part of the journey. So that's sort of one. Yeah, I'll sort of always remember that discussion I had with him, and that's the thing that I try to keep at the back of my mind whenever we, any investments we make, any companies that we're involved with.
Such a powerful story, and I think a beautiful moment to end on. But before I do let you go, for anyone listening just wanting to find out more information about Outwood VC, dig a little bit deeper on the topics we've talked about, or even contact a member of your team, what's the best starting point for everything?
Well, there's a lot of information on our website, outwoodvc.com. So you'll see all our companies on there, a few snippets about the team. But I think there's a form on there to get in contact with us as well. I'm also available on LinkedIn, as is to the rest of the team. But we're always happy for people to reach out, and always happy to chat.
Well, it's been a huge honour to have you on the podcast today. We've covered so much in a short amount of time there, from your origin story to looking back on your career, and also the tremendous insights, what you're seeing out there in the industry, and why there's so much to be positive about too. It's a real breath of fresh air. But more than anything, just a big thank you for taking the time to sit down and share that with me today, Kevin.
That's great. Thank you, Neil. It was fun.
So a big thank you to our guest, Kevin Chong, for coming on here and investing his time and sparing a little time to share his insights into the world of fintech startups and venture capital. And we did cover everything from the importance of sustainable growth, the unique advantages of London as a global fintech startup, to the opportunities that are emerging for early stage startups right now. And as we continue to explore this ever-evolving world of technology and innovation, I'd like to invite you to join me every single day. So if this is your first episode, please subscribe and rate the podcast so you don't miss any future episodes. And those ratings and reviews really do help bring more great guests like Kevin onto the show. And so I hope you enjoyed today's discussion, and hopefully it's provided you with a few valuable insights and maybe even inspiration as you navigate your own journey into the tech world. But just a big thank you for joining me today, and until next time, don't be a stranger.